Welcome back to my channel. In this video, I want to share with you something you will always be grateful for. I want to show you how to have a consistent risk to reward that is very high. When I mean high, I'm talking about you having a minimum of risk to reward 1 to 10 every single time you take a trade. So I want you to pay attention to the things I'm going to be showing you, how to do that, and enjoy the benefit. You can see this trade running. We see the one that just ended. It ended last week. That is it. They are all 1 to 10. 1 to 10. But before we get into that, there is a common question. And the question is, which one is better? High winning ratio or high risk to reward? High winning ratio or high risk to reward? Now, when people say high winning ratio, a lot of times you hear them talking about 50% winning ratio. Now, in this 50%, let's do a little calculation before we get into the chart. Let's assume that you have $1,000. You have $1,000 and you're trying to risk 10% of your trade. Of course, 10% is a very high side. It's only when you have a small capital, because what I suggest is between 1 and 2. In fact, between 0.5 and 2% max. Okay. So now let's assume, for easy calculation, let's assume that you want to risk 10% of your account. It means that your $1,000 will be traded 10 times. 10 times before you can blow the account. And each time you are taking a trade, for $100 times 10. It gives you a $1,000 account. So to blow this account, you need to lose 10 times. Now you have 50% winning ratio. Then in your 50% winning ratio, your risk to reward maybe is 1 to 2 or 1 to 3. In fact, I see a lot of people doing risk to reward 1 to 1, but it doesn't really look very, very nice. So let's stay with 1 to 2 or 1 to 3. So let's go first with 1 to 2. With 1 to 2, let's assume that you have traded 5 times because it's 50%. So you lost 5 times and you won 5 times. So the 5 times you lost half of your account, which is $500. Then the 5 times you have won, every single time you won times 2. Okay, times 2. So that means your trade $100 times 2. Every time you won, you have $200. So $200 in 5 places, you have $1,000. So when you have winning ratio of 50% and you traded 10 times, at the end of the 10 trades, you are going to have break even. Your account will still remain $1,000, no loss, no profits. That's still okay. Now, let's now say, okay, you have 1 to 3 with the same 50% winning ratio. So anytime you won times 3. So every time you won, you have $100 times 3. Simple calculation, you already know it. Many of you have already calculated in your head. We're just doing it for the sake of reminding ourselves and at the same time for other people. So $300 times 5, because you won 5 and you lost 5. So at the end of the day, you have $1,500. So at the end of 10 trades, you've been able to have 1,500. That is, you have a profit of 50%. Okay? Because of your risk to reward 1 to 3 and your winning ratio 50%. Okay? Very good. So you are in profit of $500 on $1,000. That is massive. 50% profit. Very good. So now let's turn to the second area, which is your high risk to reward. Now let's do the same 50%. Your high risk to reward. Let's do the same 50%. So meaning that this time around, you are doing a risk to reward of 1 and 1 to 10 with 50%. In fact, let's reduce it. Let's not even do 50%. Let's do 30%. Okay? 30%. So that means your same $1,000, you are trading it 10 times and you lost 7 times and you won only 3 times. Okay? You won only 3 times. So let's do our calculation and see it. Okay? Now, you lost 7 times, so that means you've lost $700. You have only 3 wins. And these 3 wins, anytime you won $100. You won $100 times 10. So anytime you won, you have $1,000. Then you won 3 times. So you have times 3. So at the end of 10 trades that you lost 7 and you won only 3, you have $3,000 profit. Can you see the benefit of high risk to reward, which I want you to pay attention to, because I'm going to show you how to do that. Just watch this to the end. Let's even assume that your winning ratio is 20%. So meaning that you lost 8 times and you won only 2 times. So anytime you are winning, remember, you are winning $100 times 10, meaning $1,000. So you now make it times 2 because you only won twice and you lost 8 times. At the end of the day, you have what? $2,000 profit. So with this same $2,000 profit, you still profit more than this person who won 50% and risk to reward 1 to 3. Can you see the differences? Now, what are we offering you in Just Candlesticks? We are offering you both. Honestly speaking, we are giving you both. We are giving you both good risk to reward and at the same time winning ratio. We don't want to, somebody say, don't blow your trumpet too much. Now, the point is, if I don't blow that trumpet and I allow you to blow it, you might not blow it good enough for me. So I would rather blow my trumpet by myself so that I can blow it very well. You understand what I'm talking about? Meaning we are so proud. I'm so proud of what we are doing here. And someone will say, you guys are just selling courses and all of that. The question I want to ask you is, until you are making consistent profit, don't learn by losses. Learn by learning. I'm going to repeat it. Until you are making consistent profit in trading, don't learn by losses. Learn by learning. That means don't continue to fund your account and losing. Why don't you use that money to learn? I know there are different courses online. There are different coaches. There are different mentors. And many of you have encountered plenty of them and it's not taking you anywhere. As long as there is still something that you are not doing right, my advice, continue to learn. You will end up finding the right one. And I beat my chest that for watching this, you have come to the right place. You have come to the right place. So let's get into the chart and see. Now, one of the things that you will learn in Just Candlestick is the fact that we teach you what is called direction of the market. Number 2, you learn target. What do you mean by a target? A target where you know there is enough space where you can make that same 1 to 10. If that is not there, we will not bother to take the trade. We don't teach you to take a trade where a trade moves in your direction, then eventually move back and take out your stop loss. No, we don't do that. Candlestick forbid us to do that. Candlestick also forbid us to blow our account. Now, Number 3, we also teach you entry. Now, this entry is very powerful because you learn how to know the candle that will show you that the market will begin to move in your direction. Most times, like people claim, it's like a sniper, a candle where there is little or no drawdown. Little or no drawdown, what people call sniper entry. So these are the things you learn. So let's look at this chart that we have that are finished. We traded it last week. Then we have another one that we are trading right now. Now, let's look at it. So here we teach you proper top-down analysis. Proper top-down analysis. We begin from weekly. We actually begin from monthly to weekly before we get into daily. So we have to ensure that all these 3 time frames, they are in sync. That is why the market cannot give you profit and go back. No, because if the monthly is going a direction and the weekly is going the same direction and daily is going the same direction, there will be a momentum. So that's what we teach you. Now let's look at this chart. We analyze this chart and let's see monthly. So we did a monthly. Just to show you. Now, the reason why I'm using my phone, because you notice that there are some videos that are recorded with the laptop, is to let you know that whatever you have is enough for you. You can use your phone to trade. You can use your laptop to trade. The point is not about the gadget. What is important that you should invest in is the skill, is the learning, rather than trying to buy big settings of laptops, of desktop. Learn first. Okay? So now look at what we did here with our higher time frame. This is monthly time frame. We've been able to know our direction. Look at our trend line here. We have our trend line. So with this, we are able to do what we call market structure and at the same time candlestick structure. Now, the market structure has to do with multiple candles. The candlestick structure is what many people are not familiar with. Many are familiar with market structure, but the candlestick structure, many don't know. And that is where the caveat here, that is where the secret is. Now, look at it here. With the candlestick structure, we're able to know that since the market got to this area, we have this candle. This candle shows us that the next candle is going to sell. That is like a spinning top at the level. Okay? So we know that the whole of this month we are going to be selling. That's number 1. Then number 2, we now move into our weekly. Weekly, we have to confirm that to us. Now, you see our weekly. So on our weekly, we now focus on candlestick structure, where we have a new low here, a new low here. Then we have this candle. This candle couldn't make a new high, couldn't make a new low, but it gave us a double top here. So after this green candle was when we actually traded. Because we already concluded, we already knew that based on candlestick structure, the next candle is going to be selling, because we have our markets, we have our level here, number 1, we have our market structure, number 2, then we now have our candlestick structure, number 3. So these 3 things confirms to us that the market is going to be selling. Okay? Now, I can't talk to all the details about this thing because they are all different classes and different explanations in the class. So now let's go with me. So after this green candle, we are now selling. So now we are going to daily. Now on daily, we see the same candlestick structure. We see the same number 1 level. We see structure. Then we see candlestick structure. That is market structure and candlestick structure. The moment we see these 3, then we know we are good to go. Now, look at it again. Number 1, we have our level that shows us the market is going down. We saw it on monthly. We saw it on weekly. Now we're on daily. So number 2, what is our market structure? Our market structure, we have a double top here. Okay. Number 3, we are looking for our candlestick structure before we take the boom. Now, what is our candlestick structure? Look at all of these candles. The market make a new low here, a new low here. Then at the end of this hammer candlestick, that is when we came into the trade, because it has shown us candlestick structure. So this is our first trade. Our first trade is this. Then we now look for our area of interest. Now, the area of interest is not where you sell. It's just a place where you want to see how the market reacts in that area before you pull the trigger. Okay? We don't put pending orders. We wait for a candle that gives us a confirmation. So now we go into our H1. H1 is where we look into. So we saw our H1, and let's go and see it. Now, this is our H1. So our H1 went up, go this way, touch our area of interest. So since it touched it, we are not going to enter the market. We will now pay attention to this area. So we go to a lower time frame, either 2 minutes, 3 minutes, or 5 minutes. We actually enter this trade with 2 minutes, but I'm going to show you 3 minutes here now. Okay? Show you 3 minutes. See what happened in 3 minutes. You know, the second trade is the one running. So this is it. So now I want you to look at something here. Remember the things we are paying attention to. We are paying attention to levels. We are paying attention to market structure. And at the same time, we pay attention to what? Candlestick structure. Now, here, before we enter, in our entry, very unique entry, look at the market, giving you a market structure going up. So it touched it here. Now, since it touched it there, because our area of interest, we are not just going to pull the trigger. We want the market to confirm to us that it's not going up, because based on market structure, this is an uptrend. And based on our monthly, we are trading down, weekly down, daily down, okay? At the same time, we want to make sure our entry also gives us a down structure. So, but here it touched the level. So we are not pulling the trigger because the market touched the level. We are pulling the trigger because number one, the market touched the level. Then at the same time, he gives us a structure that is in sync with all the higher time frame. So now, how do we do that? We now wait for the market to give us the magic. So how did the market do it? The market gave us the magic by coming, touch it, it came down, then went up again, it couldn't break it, and gave us a double top. Then when it gave us a double top, we now look for our candlestick structure here. Then we enter the market and we put 7 pips stop loss. Then our target take profit is 1 to 10. And we did it. Now, one other thing that I want to pay attention to is that this risk to reward 1 to 10 did not hit it the first day, because so many things happen. But we are not afraid, because we know that direction of the market was very sure from beginning. So let's see what happens. Look at how it moves. Look at how it moves. Look at how it moves. Look at it. Then eventually it got to this level, almost hit it, about 9. Then he pulls back. Look at it. He pulls back. He pulls back. He pulls back. Now, when the market was pulling back, somebody might have been afraid to come out of the market. Look at it. Look at it. So it pulls back. We waited and allowed it to play out the second day. And the second day, look at what happened. Look at it. It blasted it through to this level and gave us about 1 to 18 risks to reward. But of course, we came out. Our 10 was our target. 10 was our target. So we came out. Now we're already in another trade. The same pair, because we know that the overall direction for monthly is down. The overall direction for weekly is down. And daily, we now look for it again. So we are in another trade right now. That's it now. I'm showing you that. You can see. We are another trade. The same style of analysis. Now, let's even assume this one is a loss. This one, what we are risking is just 5 pips here. Let's assume this one is a loss. we already made 1 to 10 in our first trade. So if we lost it, we only lost 1%. So we still have 9% profit. Now, so this is what candlestick helps you. It gives you all of these advantages where you can enter the market in a lower time frame with a small stop loss, but a very high risk to reward. And at the same time, high winning ratio. So this is not something we are trying to sell a course. This is a knowledge we are trying to give to people. It's a knowledge we're trying to give to people. I used to tell my story to so many of my students. When I was learning many years ago, there's a guy, if I call his name online, I learned from him. And this is not what he was teaching. He was teaching binary. I learned from him 4 times. I did his course 4 times because when I was done with his course, I noticed that I wasn't having the result this guy is having. So I don't want to complain that the guy didn't teach me well. I just felt that there's something he taught me that I need to know more. I did his course 4 times. So, ladies and gentlemen, my advice for you, as long as you are not making consistent win, keep learning. Don't learn by losses. Learn by training. I repeat, don't learn by losses when you continue to, fund your account and think that one is going to. This is not gambling. This is a skill that you need to really, really know. And if you don't know it and you want to make profit, keep learning. So I want to advise you. I haven't watched this video to this point. I want to give you an opportunity because you watched to this point. I did a promo some weeks ago. Many people jumped at the promo and it ended. And many people came by. I said the promo ended. My promo is not about like the way people do promo where you think you are trying to get a student. No, promo is promo. The one you do in developed society. If it's promo, it's promo. If it's ended, it's ended. So, but because you watch this video to this, I'm going to specially give you the same promo. The same promo. So what you need to do, just DM me and you get that thing. So keep learning and keep winning until you are making consistent profit and high risk to reward and high winning ratio. Don't stop. There is a lot of prospect in this market, but remember, there's a lot of losses too in this market. Join the group of people that are making wins and let us hear your story. Okay? Thank you very much. I'll be waiting for you at the other side. God bless you.